The market rewards those who can wait. It punishes those who cannot. This is a truth I learned slowly and at great expense. In my early years, I believed that action was the same as progress. I believed that being early was the same as being right. I was wrong on both counts. The market does not care who arrives first. It only pays those who arrive at the proper time, and that time is revealed only through confirmation. Most traders today are not undone by ignorance. They are undone by impatience. They see a possibility and treat it as a certainty. They see a hint and act as though it were a verdict. The market offers endless suggestions, but very few confirmations. Learning the difference between the two is the art that separates the professional from the hopeful. Confirmation is not a luxury. It is not something you use when conditions are comfortable. It is the foundation of survival. Every great loss I ever suffered shared one common trait. I acted before the market finished speaking. I assumed. I anticipated. I committed without proof. And the market, being an unforgiving instructor, corrected me without mercy. The desire to predict is deeply human. The desire to be early is deeply seductive. It makes the trader feel clever, superior, in possession of insight others lack. But the market does not reward cleverness. It rewards discipline. You can be early and still be ruined. You can be late and still make a fortune. Timing in trading is not about speed. It is about alignment with reality as it reveals itself. Confirmation begins with humility. It requires you to accept that you do not know what will happen next. All you can know is what is happening now. The tape tells the truth, but only to those willing to listen without prejudice. When you demand that the market behave according to your expectations, you stop listening. When you wait for confirmation, you allow the market to lead. Many traders confuse confirmation with perfection. They wait for every signal to line up, every doubt to disappear, and by then the move is gone. That is not confirmation. That is fear dressed up as patience. Confirmation is not about certainty. It is about evidence. It is about the market proving, through price and behavior, that your idea has merit. A trade idea is cheap. Everyone has one. Confirmation is expensive. It costs time, missed opportunities, and wounded pride. You must watch moves begin without you. You must see others profit while you remain flat. This is the toll the market charges for consistency. Pay it willingly, or the market will collect far more later. When I speak of confirmation, I do not mean indicators agreeing or patterns looking attractive. I mean the market behaving in a way that supports your position. In an advancing market, confirmation is strength following strength, not strength followed by collapse. It is higher prices holding, not immediately being rejected. In a declining market, it is weakness that persists, not weakness that instantly reverses. The market always tests conviction. It offers false starts to lure the impatient. It offers small profits to tempt premature commitment. These are traps, and they are set for those who need to be involved. The professional trader does not need to be involved. He needs to be right enough, often enough, with controlled risk. Confirmation helps him achieve this by filtering out marginal trades. There were times when I saw a market that looked ready to move and I entered before confirmation, convinced that my experience justified the risk. Sometimes I was right, and those successes did more damage than the failures. They reinforced bad habits. They whispered that rules could be bent, but rules that bend eventually break, and they always break at the worst possible moment. Waiting for confirmation is an act of self-control. It is a decision to place process above emotion. When you wait, you give the market time to invalidate weak ideas before they cost you money. You allow false moves to reveal themselves. You let the impatient exhaust themselves. By the time confirmation arrives, much of the risk has already been removed. This does not mean the trade is without risk. Nothing in trading is. But it means the odds have shifted. The market has shown its hand, even if only partially. You are no longer acting on hope. You are acting on evidence. This is the only edge that endures. The modern trader is surrounded by noise. News, opinions, alerts, and endless commentary compete for attention. All of it creates urgency. Urgency is the enemy of confirmation. The market does not move according to headlines. It moves according to supply and demand, fear and greed, accumulation and distribution. Confirmation is found in price behavior, not in narratives. I learned to distrust excitement. When a trade felt obvious, when everyone seemed to agree, confirmation often failed. The best trades rarely announce themselves loudly. They emerge quietly, after doubt has done its work. They require you to sit through periods of inactivity and uncertainty. Most traders cannot tolerate this, and so they manufacture reasons to act. There is a peculiar discomfort in waiting. It feels unproductive. It feels like indecision. In reality, it is discipline in its purest form. The market does not pay you for effort. It pays you for judgment. Judgment requires time. If you rush it, you are not judging. You are reacting. Confirmation also protects you from your own bias. Once you form an opinion, your mind begins to defend it. You notice supporting evidence and ignore contradictions. Waiting for confirmation forces you to confront reality. If the market does not confirm your idea, you are spared the cost of being wrong. If it does, you enter with greater confidence and clearer risk. Many traders ask how long they should wait. There is no fixed answer. Confirmation does not operate on a clock. It operates on behavior. Sometimes it appears quickly. Sometimes it takes days or weeks. The market does not owe you opportunity on your schedule. The sooner you accept this, the longer you will survive. I have missed many trades by waiting. I have never regretted a single one. I have regretted every trade I entered without confirmation. That is not coincidence. It is cause and effect. The market is patient. It will be there tomorrow. Your capital may not be if you misuse it today. The phrase "confirm before you commit" is not a slogan. It is a rule written in losses. Commitment without confirmation is speculation in its most dangerous form. It places faith above evidence. It assumes the market will reward conviction. It will not. It rewards alignment. As you develop this discipline, you will notice a change. You will trade less. You will feel calmer. You will stop chasing every movement and start waiting for meaningful ones. This reduction in activity is not a sign of decline. It is a sign of maturity. The trader who is always active is rarely effective. In this first part, I want you to sit with this idea. Examine your own behavior. Recall the trades that hurt the most. Ask yourself honestly whether confirmation was present or whether impatience was in control. The market does not judge you. It simply responds. If you wish to change the response, you must change the behavior. Pause here. When you are ready, tell me to continue, and I will show you how confirmation applies across time frames, how to recognize it in real conditions, and how to commit capital without surrendering discipline. Confirmation is not a single moment. It is a process. The market rarely declares its intentions in one bold stroke. More often, it reveals them through a sequence of actions that, taken together, form a clear statement. The trader who understands this does not look for a signal. He looks for agreement between what he expects and what the market delivers. Across time frames, confirmation gains weight. A movement that appears convincing on a small chart but contradicts the larger trend is not confirmation. It is temptation. True confirmation respects structure. It aligns the short-term behavior with the long-term direction. This is why so many traders feel whipsawed. They seek proof in the noisiest place and ignore it where it matters most. I learned to let the higher time frame speak first. If the long-term trend is advancing, confirmation on the lower time frames must come in the form of strength, reasserting itself after a pause, not weakness disguised as opportunity. When the long-term trend is declining, confirmation appears as rallies that fail, not sudden bursts of hope. This perspective removes much confusion. It tells you not only when to act, but when not to. There is a difference between a market that can move and a market that will move. Many trades are taken because price could do something. Confirmation waits until price demonstrates that it is willing to do it. That distinction alone will keep you out of countless poor positions. Possibility is endless. Probability is selective. The professional trader lives in probabilities. Commitment should be proportional to confirmation. This is another lesson learned through loss. When evidence is weak, exposure should be small or non-existent. When evidence is strong and aligned, exposure can be increased within reason. Many traders invert this logic. They bet heavily on ideas and lightly on proof. The market has no mercy for such inversions. You must also learn to recognize false confirmation. The market is clever. It often provides just enough agreement to lure the impatient, then withdraws it. A single strong bar means nothing if it is immediately erased. A breakout that cannot hold is not confirmation, it is rejection. The market speaks through follow-through, not through isolated events. Follow-through is the language of commitment. When buyers are truly in control, strength persists. When sellers dominate, weakness does not vanish at the first sign of relief. Confirmation appears when effort produces result. When effort is high and result is small, the market is telling you something important. Listen to it. One of the hardest lessons is learning to wait after confirmation appears. Many traders see confirmation and rush in at the worst possible price, driven by fear of missing out. Confirmation does not excuse poor execution. It allows for patience with purpose. Once the market has confirmed direction, you still must wait for a moment when risk is defined and manageable. Discipline does not end when evidence appears. It becomes more important. The urge to commit everything at once is another form of impatience. The market does not require all your capital to make its move. It does not care about your confidence. Scaling into conviction as confirmation builds is often wiser than betting everything on the first sign of agreement. This approach keeps you flexible. Flexibility is strength in a business defined by uncertainty. I have seen traders ruin themselves by being right too soon. They entered on an idea that eventually proved correct, but they did not survive the journey. Confirmation reduces this risk by aligning entry with momentum rather than anticipation. It does not guarantee profit, but it increases the chance that you will remain solvent long enough for your idea to matter. There will be times when confirmation never comes. The market will hover, tease, and then move in a way you did not expect. Accept this without resentment. No single trade matters. What matters is that your process remains intact. A trader who abandons confirmation out of frustration is no different from one who never believed in it at all. The discipline of confirmation changes how you experience the market. You become less reactive. You stop feeling personally challenged by every movement. You no longer need to prove anything. The market becomes a field of observation rather than a battleground. This shift is subtle but profound. It is the difference between surviving and thriving. Risk management and confirmation are inseparable. The clearer the confirmation, the easier it is to define where you are wrong. Ambiguous setups produce ambiguous exits, and ambiguity is expensive. When the market confirms your idea, it also reveals the conditions under which that idea fails. This clarity is a gift. Use it. Do not confuse confirmation with consensus. When everyone agrees, confirmation is often exhausted. The best confirmations occur when the market begins to agree with you, not when the crowd already has. This requires independence of thought, but not defiance. You are not trying to be different. You are trying to be aligned before the obvious becomes crowded. Waiting for confirmation does not mean avoiding risk. It means choosing when to accept it. Risk taken with evidence is manageable. Risk taken without it is reckless. The market does not distinguish between bravery and foolishness. It only counts results. As you practice this art, you will notice something else. Your emotional swings will diminish. You will no longer feel the highs of reckless wins or the lows of impulsive losses. Your equity curve will smooth, and so will your mind. This is not accidental. Confirmation removes many of the emotional triggers that lead to self-sabotage. The trader who confirms before committing sleeps better. He is not haunted by every tick. He knows why he is in the trade and what would cause him to exit. This clarity is worth more than any indicator or strategy. It cannot be purchased. It must be earned through restraint. The market will always tempt you to break this rule. There will always be a reason to act now, to just take a small position, to bend the standard once. This is the voice of impatience, and it never stops speaking. Your task is not to silence it, but to ignore it. Discipline is not the absence of temptation, it is the refusal to obey it. Remember this principle as long as you trade. The market makes large moves available to those who are prepared to wait. You do not need to catch the beginning or the end. You need the middle, where confirmation and opportunity overlap. That is where risk is controlled and reward is meaningful. Confirm before you commit. No exceptions. This rule will not make you rich overnight. It will do something far more valuable. It will keep you in the game long enough for skill, patience, and experience to compound. In trading, survival is the first victory. Everything else follows from that.